This is forexoverviews.com, and on this video I will be presenting a long-term analysis on euro-dollar forex pair, mostly based on monthly and on weekly charts. Here is a monthly chart of euro-dollar, and we can see that on the past decade market has made a strong and very nice upward move, and now market is consolidating on this zone. Market is making some congestion here, and this is happening just above the 200 period moving average, which is this golden line shown here. Market tested it for the first time and tested it for the second time, and now it stands just above this line. This tells us the bullish power of the market, because the 200 period moving average is a long-term and strong dynamic level of support and resistance for the market. So if the market is holding above it after this nice move and consolidating above it, it tells that the market has some bullish power, the power to proceed to the upside. And at this another monthly chart, we can see that in fact this consolidation is the symmetrical triangle that is marked by these two red lines. And depending on the way on how you place this line, it could also be the descending triangle. And we know that sooner or later the triangles will be breaked either to the upside or to the downside. And if this is the descending triangle, it will favor the breakout to the downside. But personally, I prefer to put this line here and treat the structure as the symmetrical triangle. And if this is really the case, this could be a reversal or a continuation structure. And looking at this chart, we can see that it will favor the breakout to the upside due to this strong up move, and after this consolidation in triangle formation will favor the breakout to the upside. And we could even treat this as the pennant pattern. Take a look. We can draw a line here, and there is it. We can have the pennant pattern, which in its nature is a continuation pattern. So we can see here another sign of bullish power on euro-dollar, and we are approaching the point of breakout of this triangle, being it either to the upside or to the downside, because the market is forming the fifth wave inside of it. Here is the first wave, the second wave, the third wave, the fourth wave, and now market is forming the fifth wave. Usually the triangles get breaked after the formation of the fifth wave. If you want, you can also better redefine this triangle. You can redefine the lines that make part of it, and also redefine the pennant, starting by here, so it looks more appealing, looks more good looking to trade pattern. And now let's take a look at another overview of the monthly chart with the Napoli framework and Fibonacci. And this chart is for showing that the trend has turned to the bullish side. Okay, market is above the MACD predictor line, and so the trend is bullish here, and also there is no divergence on the MACD lines. Okay, so trend is bullish here. Now let's see the Fibonacci analysis on the monthly chart. We can see many important things with this Fibonacci analysis, and first we can see that market has stopped at the 5th percent support of this entire up move, and market tested it for the first time and after for the second time. And when the market tested it for the second time, it has completed the minor extension of this ABCD pattern, A, B, C, D, completing the 618 Fibonacci extension of this pattern, and right at the 50% fib support. This is some type of agreement, although the classical agreements are between the 38 and 618 Fibonacci levels, but this 50% fib support can be acceptable since this is a very long-term chart, and these important levels stop the market to continue the move to the downside and to reach the 100% extension, at least for now, for some time. And market started to move up again, and as we see on the previous chart, it turned the trend to the bullish side, and by this up move it was a retracement of this previous down move here. Okay, you can see market doing a down leg, and the movement was stopped by this 50% fib resistance right at the zone. It quite has not reached the 618 fib resistance. It was a bit above, maybe here, so I have counted it as the 50% fib resistance. And market started another down move, another retracement, and this retracement also reached and was stopped by the 50% fib support of this up move. Okay, and more importantly, the market has made this producing a bullish pattern, producing the bullish engulfing candlestick pattern. So this shows some bullish power on the market, at least for quite some time, at least for quite the next months, if this pattern will work, if this pattern will take the market to the upside. And if this pattern will work, the target of this pattern will be almost these highs. And if this pattern will really work, if this Fibonacci supports that stop the market, these levels of extension that stop the market will work and will produce the triggering of the bullish engulfing candlestick pattern, most probably market will take out these highs, most probably. Okay, so here we can see another bullish sign, more bullish power on the market. And now let's shift to the weekly chart. This is a weekly chart of euro-dollar, and let's start the analysis with the moving averages. We can see that the market was on a downtrend below the MAs, and market started an important up move, reaching the 200 period and 100 period moving averages. And these MAs had put pressure on the market. It pressured the market to the downside, as you can see here. Okay, it put pressure, and the market restarted the down move in respect with this main trend. Okay, so here we have bearish signal on the market. But take a look that when the market made this up move, it also has left some bullish signal. We can see a crossover between the 20 and the 50 MAs, and we can see that the market is being held by the 5th period MA. So maybe this could be an early sign of bullish power. This is a situation that is often present on the market when working with MAs. The longer period point to something, and shorter period point to something totally different. So we don't know, we can't know by these signals what is the dominant, but maybe this is the early sign of bullish power on the market. Now let's take a look at the George framework. Not too much things to comment here. What we can see here is that the trend is bearish. Okay, and at this week we have to keep an eye on this current bar, because if it will reach the red line and close below it, it will be the stop grabber pattern with a target on the previous low, or maybe here. So not much to say here, despite the trend is bearish. Must keep an eye on this bar, and also there is no divergence on the MACD lines. And about the Fibonacci analysis, there is not much to comment, just that the market almost has completed this 100% ABCD pattern, ABCD, and although quite not reaching it, I'm treating it as complete due to the nature of this retracement. And as stated on the monthly chart, market has stopped on the 5% support, and maybe now market will have the power to turn this trend to bullish. So the most important information was given on the monthly chart regarding Fibonacci analysis. Now let's take a look at another chart. Here are the lines, and on this chart we can extract very useful information from the market. First, we see the market in a downtrend on the left, being held and capped by two trend lines, being the main in red and the minor in yellow. And these two trend lines suffered breakouts to the upside, and the main one, the one in red, after suffering the breakout to the upside, is now being tested from the other side. Okay, here market tested this downtrend line from the other side, and this is an important bullish sign for the market, this breakout and retest of the line. And you can see that after this the market started the up move, producing a possible uptrend line, maybe a main one, and retested again this trend line, and maybe had the power now to continue this move up. And note that this retest of this trend line happened at important level of classical technical analysis of support and resistance, being the 126 and 127, as you can see in previous bottoms, this one and this one. So this zone, this area, also contributed to add support to the retest of this trend line from the other side. So here we have very important bullish signal on the market. And now let's see a daily chart, but just to see the monthly pivot points, and the teal lines are always the pivot point itself, red lines the resistance one, and green lines the support one. You can see here that the market, by doing this down move, was held by the monthly pivot support one. It could not pass this area, and this itself is a nice bullish signal, because we know that when the market stands at some good uptrend, it's usually held by the pivot point itself or by the monthly pivot support one. And let's return back to the weekly chart, and we see here a classical technical analysis pattern, which is the inverted head and shoulders. Well, this is not perfect, because to be perfect it would need to be placed beyond this low, but still this is a head and shoulders, but still potential, because the neckline hasn't been broken yet. Okay, in my opinion, this is the most important picture of this entire analysis due to the signs that has been shown to you here. But we also have another one. We have now another head and shoulders, and this one a bearish one. And as the previous one, it's not perfect because it's not beyond a significant high, but still it's a head and shoulders and still in potential because the neckline hasn't been broken to the downside yet. So we must pay attention to which breakout will take place, if the breakout to the downside or if the breakout to the upside with this other head and shoulders. And I'm favoring the breakout to the upside, again due to the all bullish signals that have been shown until here. Well, I must say that the head and shoulders pattern usually produces big moves on the market, especially on a weekly chart. We can imagine here the consequences of a breakout either to the upside of this head and shoulder or to the downside of this head and shoulders. It would be such big moves. At minimum this load would be taken, or at minimum this high would be taken. So we are in front of the possibility of big moves in the long term of euro dollar. And about these big moves, there are two scenarios that I would like to show you now that are possibilities that the market can make in a very long term. For this, let's come back to the monthly chart, to the first possibility in the case of upward breakout of this head and shoulders. Here is it. This is the picture, but before talking about it, let's set the target of the head and shoulders, which is the distance between the head and the neckline, counted to the upside at the point of breakout. If the market will break it out from here after making some upward move, this will be the target. By the way, the head and shoulders is this: left shoulder, head, and right shoulder of the picture shown on the previous chart. That was the weekly chart, but now it's seen from the monthly chart. So the target will be here, and it will be beyond these hikes if it follows the classical approach of target. So if the market takes out this hike, it probably will reach the target of this butterfly, most precisely the 127 extension of this butterfly at minimum at 160.25, and the 127 extension of this butterfly coincides with the 127 extension of this ABCD pattern. A, B, C, D, 127 extension, and it also coincides with this previous and very important top. So this butterfly cell can be a perfect wash and rinse of these tops. But if the market will really breaks it up, this head and shoulders, before reaching the 127 extension, market will have some strong barrier that could be the Gartley 222 cell at 144 and 10. This is the ABCD pattern, ABCD, after strong downward move, and this 222 cell is exactly at the 78 fib resistance of this down move. So this is the first possibility. This will be a good looking one, butterfly taking place right at the top of this important zone. Now let's see the second possibility in the case of breakout to the downside of this head and shoulders on the monthly chart. Let's see it. Here is it. This is the picture, and as the previous, let's first set the target of the head and shoulders This is the head and shoulders seen on the monthly chart. Let's set the target. If this is the breakout, somewhere like here, the target will be beyond this low and even beyond this low. Okay, and if this breakout takes place to the downside, market can reach, and most probably will reach at minimum, the 127 extension of this butterfly buy at 110.50. Okay, and the triangle that has been shown at the start of this video will not be a triangle anymore, because this trend line will be taken out and it will be the downward channel as shown here by the red lines. And if the market will proceed even low beyond the 127 extension, take a look at where market can reach. If it reaches the 1618 extension, it can lead the market to the parity at 100, here at 0.9980. This will be huge consequence for the euro currency if this butterfly will reach this zone right at the 1618 extension of this butterfly buy and right at the bottom of this downward channel. It will be also strong structure of reversal. Well, after this, what's the conclusion? I've presented many sides of bull power and of bear power on the market, and most of them were from the bulls, showing that market has more signals of bull power than of bear power. And I favor breakout to the upside of the head and shoulders pattern, the inverted head and shoulders pattern, and in my opinion I have a bullish view on the market at this time, but for a very long term, only for long term. I must say that I'm not advising you to do any trades, to buy or sell anything. This video is for educational purposes only. Now take a time to read the disclaimer. Thanks for watching.